All right, guys, what up? What up? This is Khalid Nathan Alim, the real estate boy, and let me pick the go live here on Instagram, so we can go live here. Let's see if it doesn't front on me. It definitely looks like it's fronting on me. Connect software to go live, and I'm looking to go live, and it looks like it's definitely front. Okay, there we go. Okay, now we on it. Now we on it. All right, so let me. That's not what I want to show y'all. This is what I want to show y'all. All right, let's get it up. Let's get it up. All right, guys, welcome. This is Colin Nathan Alim, the real estate boy, and welcome to the Real Estate Investor Academy. This is where I take my umpteen years of experience with working it with investors and I give all the information to you guys, okay? Free of charge. Anybody that's looking to make money in the real estate market by buying a home and flipping, or if they just want to buy and hold and be an investor, you're in the right place. So again, I'm Colin Nathan Alim, and this is the Real Estate Bulls Investor Academy. And I'm Colin Nathan Alim, licensed real estate agent and team leader of the Boss Network in Philadelphia. Now, I do this every Friday at 11 o'clock, and it's 11:03. All right. So every Friday at 11 o'clock, tune in. I'm on Facebook. I'm on Instagram. I'm on YouTube, and I'm on LinkedIn. Okay. So every week, I want to come here and give you guys just one chapter, just one set of information that you can take and you can implement right away. Okay. That's my goal. If you want to contact me, 267-930-1249. And if you would like to go to my website, is sellwithkhaled.com. Okay. So let's get into it. This is part two. Okay. Part one. If you do want to see that one, you can go to Real Estate Boy and you can go search me on my YouTube page and you can see part one. Okay. These do go in succession. So you do have to go to the other ones, the backup ones, the ones that we did previous, so you can know what's going on. Okay. This is part two. Okay. Let's get to part two. Part two is picking the right location. So you last week we had went over whether for you to get right in your mind, are you going to buy and hold or are you going to fix and flip? Okay. What type of financing are you going to use? Are you using hard money? Are you using cash? Are you using a conventional loan or a FHA loan? Whatever. Okay, so we kind of drilled that out last time. Now, one of the most important things is using finding the right location. Okay, why is finding the right location critical? Number one, it helps with analysis paralysis. A lot of times people have analysis paralysis when they have too many options. Okay, too many options leads to analysis paralysis. You need to focus on one area and move forward. And again, this is for the beginner investor. Okay, this is for the beginner and investor. You want to pick one particular area and you want to concentrate on that area. Okay, also, by picking one area, you avoid competition. Big investors dominate perfect markets. If it's a perfect market, then every big wig is probably in that market. You want to start somewhere where you can win without facing stiff competition. Because first getting started is a little rough, okay? It's a little rough. It's going to have its ups and downs. Because what does Eric Thomas say? If it was easy, everybody would be doing it. If it was easy, everybody would be doing it. And also by picking one area, you build local expertise. So this is mastering one area. Just mastering one area gives you an edge with specialized knowledge and faster decision making because you know that particular area. So let's take Philadelphia, for example. I'm in Philadelphia. People who live in Philadelphia know that, for example, Chestnut Hill, you have a different dynamic going on than you do Frankfurt. Okay. It's totally different. Totally different. Okay. But that's because I grew up in Philadelphia and I live in Philadelphia. So I would know that. Okay. So let's move on. Let's move on here. All right. So what you want to do is you want to brainstorm the areas that you already know. So the areas that you already know, you want to brainstorm. Why go out to an area that you don't know? Now, that's nothing against of investing out of town. That's great, but you should probably start where you already know. Okay. Why? You leverage personal experience. Okay. Start with the places where you already lived, or start with the places that you already worked or frequently visit. Okay. Your existing knowledge is valuable. What you know of that area is super duper valuable when investing. Okay. Also, by knowing the area, you minimize surprises, okay? Familiarity builds confidence. Because you're familiar with the area, that's going to build confidence, all right? That's going to build your confidence in investing in that area. Local knowledge helps you anticipate issues before they arise. Why? Because you already know about the area. You already know about the situations that's going to arise before they happen, because you already know the area, versus going and starting out investing in a place that you know nothing about. Okay. Also, you can identify hidden opportunities. Your insider perspective, it reveals trends and neighborhood potential that data alone might miss, because you know the people. You know the people in that area. So there are going to be things that big investors miss because they don't know this or they don't know that. Okay. So you want to leverage your experience that you have already, because that's going to minimize the surprises, and it's also going to help you identify hidden opportunities in that. And again, I'm talking to beginner investors. I'm talking to people who want to invest in real estate. Okay, they want to either buy and hold or they want to flip. These are things that can really help you. Okay, next, what you want to do is you want to check the crime rate. Okay. You now listen. I want to say this before I start. Okay. In bad areas, you can have good tenants and bad tenants. In good areas, you can have good tenants or bad tenants. And sometimes you have good people, but bad things happen to them. Okay. So there is risk. There is risk, but that's where the reward comes from, right? That's where the reward comes from. So you want to check the crime rate in the area that you want to invest in. Okay. It's said that safer neighborhoods attract better long-term tenants. That's what they say. Okay. Quality tenants mean fewer headaches and more consistent income. This is usually the case. Quality tenants. Now, a quality tenant can be in a good area, a quality tenant can be in a bad area. So, you want to check the quality of the tenant, meaning what? You have to have some type of screening process. You have to have some type of screening process so you can kind of sift through the good and the bad tenants. Okay. One research tool that you can use to find out the detailed crime statistics in the area is city-data.com. You can also use ChatGPT. You can also use ChatGPT to find out the crime areas. And for all this stuff that I'm about to tell you, you can use ChatGPT. Okay. All this stuff I'm about to tell you, you can use ChatGPT to kind of find out, okay, in Philadelphia, or let me pick a neighborhood. In the Fishtown neighborhood, what's been the crime rate compared to Brewery Town? So you can do that with using ChatGPT, but you can also go to data slash city-slatter.com. Okay. Also, you can compare on ChatGPT, you can compare the investment areas side by side and the potential crime rates. Okay. Also, income potential. Now, according to the statistics, okay, this is not my opinion. According to the statistics, lower crime rate correlates with higher rent potential. Okay. Safety commands a premium in the rental market. So that's why, and these are factors that you have to weigh. These are factors that you have to weigh when you're buying a home and when you're investing in real estate. Okay. Let's move to the next one. School ratings matter. School ratings matter. So the area that you're picking in order to invest in, school ratings matter. Higher rental income goes to areas that have top schools. So those top schools, properties near top schools, they command premium rents. That's logical. That's logical, okay? Families stay longer to maintain the school enrollment. I've When I talk to people about buying and selling a home, it's like, oh, we can't move until the summer because my kid is in school. Okay. So when you have a family, a lot of times it tends to be a stable or tenant, let's say it like that, because the kids are in school. And a lot of times people don't just want to pick up and leave their kids. So you got to think, okay, do I want to invest in a place that has a top school or schools don't matter? Okay. Um, and good schools buffer property values during downtimes because if somebody wants to be close to a school, they're going to look at that over, oh, well, I can't afford this anymore, so I got to leave. Okay. You can use Trulia's school map feature to compare educational quality across different towns and neighborhoods. You could also use niche.com. You can use niche.com and you can also go on ChatGPT. You go on ChatGPT and you can ask them, okay, you can compare the schooling in this area to the schooling in that area also. Okay, let's move on. Okay, so now we have employment and job growth. So the area that you're thinking of investing in, you want to find out what's the employment. What type of employment is the employment curve going up? Is there is it going up or is it going down? Is there a bunch of unemployment there? Okay. What's the job growth? Is the jobs Are jobs coming to that area or are jobs leaving that area? Okay. It says low unemployment means more qualified renters with stable income. So if you're looking at an area, and again, you can get all this from ChatGPT. If you're looking at a low unemployment area, this usually means that those renters have a stable income. So a lot of times you'll have a better quality of tenant. Okay. Now, it says job creation creates upward pressure on the rental rates. So if you have job growth, meaning that companies are coming into this area, that's going to put pressure on the rents to go up. And that's what you want. If you're buying and holding, once you buy the property, you want rents to go up because now that opens your profit margin. Okay. What about a strong job market? Strong job markets drive property values increase. So when you have a strong job market, okay, the property value it increases, and that's what you want. You want appreciation. You want appreciation. The double whammy is the appreciation and the growing of the income. You want both of them. Okay. New workers need housing reduce vacancy rates. Okay, so if the demand of the housing is going up, okay, and there's more jobs that's coming there, you're going to have more people that come to that area, and it's going to drive the prices up. And that's what you want. You want to drive the prices up, and you also want the income to go up also. So you can look at this data on city-data.com to research the local employment stats and identifying promising growth areas. But what I would do is use ChatGPT. I would use ChatGPT. And when you're using ChatGPT for information like this, what you want ChatGPT to do is you want ChatGPT to source. Okay. You want ChatGPT to source where they got this information from. Because a lot of times with ChatGPT, what it does, it hallucinates and they're cutting down on that. But a lot of times it kind of tells you what you want to hear. Okay. So let's continue. So the growth rate, the population growth rate. How is the population growth rate in the area that you're looking to invest? Again, you can go to ChatGPT to find out what's the growth rate. Okay. Transportation access. Well, Philadelphia is a very walkable city, and we have great transportation, even though most people don't like SEPTA. Okay, but properties near transit stops attract car-free tenants. They can often command 10 to 15% higher rents. Okay, so if your property or property that you're going to buy is close to public transportation, that can increase the rent. Okay, also, how easy is the access to the highway? All right, easy access to major roads reduce commute times, and commute times is a major factor to many renters. So if you can try to rent, or not, excuse me, try to buy a place that's close to major highway access. Okay. Also, walkability. Walkable neighborhoods attract premium tenants. They're willing to pay more for convenience, and most of Philadelphia is walkable. All right, so that's good for us in Philadelphia. But the more walkable the area, the more the person has to spend on their home because they don't have to have a car, they don't have to pay gas, so on and so forth. So you can use Google Transit and score to assess transportation accessibility for potential investment areas. So when you're looking at potential investment areas, you can use Google Transit and the walk score, but you can also use ChatGPT to see, okay, how walkable is this area? Okay. Also, the presence of major businesses. Okay. When businesses go to different areas, they do a bunch of studying. These big chains, they invest millions in local research. So their presence confirms market viability that you can leverage for free. Okay. Because when a Walmart goes somewhere or a Starbucks goes somewhere, they've put in the work to find out, okay, how's this area? So if you want to, you could follow them. Also, major employers provide stable jobs to potential tenants. This reduces vacancy rate and payment issues. So if you're looking at a place to invest in, how is the employment rate? Because you want to make sure it's stable. Because if people can't pay their rent, excuse me, if people don't have a good job, a lot of times they can't pay the rent. Okay. And proximity to retail and services boost the retail appeal. Tenants will pay more for locations near amenities they use daily. So if you can invest close to like a shopping mall, you can invest close to a place of retail and a place of different services that have different amenities, then that's going to score big with renters. That's going to score big with renters. So drive potential investment areas and drive them, meaning like go through them. If you're going to invest, okay, I want to invest in Fishtown. I want to make sure I drive through Fishtown and see, okay, how close is it to these different amenities? All right. And you can do a quick assessment, but again, you can do an assessment with ChatGPT also. Okay. Now, as far as for the price to rent ratio, okay, this is a great tool. This is a great tool to see, okay, should I be buying this home or should I pass on to something else? So, if you have a house, for example, that's 240 and you divide that by 9,200. So, this is the monthly rent, but if you times this by 12, which would be the year is 9,000 is 9,200. Okay. So what you would do is you would take $240,000 and divide it by 9,200. So when you do that, you get the price to rent ratio. Now, price to rent ratio, if it's below 15, it's a better buy. Okay. If it's 15 to 20, it depends on the situation. If it's over 20, then renting may be smarter. Also, what you can use is the 1% rule. If you're looking at a property, for example, $100,000, you should look at the rent. It should at least rent for $1,000. If it rents for over that, then you may want to move on to something else. Okay. And last but not least, we have the property taxes and insurance costs. When you go and you're looking at a property, you really want to try to get the lowest uh, insurance that you can get, the cheapest that you can get. Okay. And the reason why is because that's cutting in on your profits. That's cutting in on your profits. So You want to be smart about insurances and not kind of blow the bank with the insurances. But a property with lower purchase price, it may, but higher taxes, it might be less profitable than a more expensive property in a lower tax area. So you do want to see the taxes. For example, I'm in Philadelphia. Philadelphia taxes are lower than Upper Darby, even though Upper Darby or Philadelphia is getting up there. Okay, but it's lower. So if you're looking to invest and it's like, okay, I'm gonna invest in Upper Darby, okay, you really should look how does that look in Philadelphia? Because in Philly, the taxes are lower. So that has to go into your equation. Okay. And to make your final choice, what you want to do is match locations to your specific investment criteria. Focus on what matters most in your strategy. Okay, so evaluate against your goals. Also, number two is cross off areas that don't meet your minimum requirements. Okay, be ruthless in your assessment. So eliminate poor choices. All this stuff you want to write down. All this stuff you want to write down. Also, don't seek perfection, okay? Seek profitability. Make sure that it cash flows. Make sure that it cash flows if you're doing a buy and hold. Make sure it cash flows from day one, okay? Choose one area and move forward with purpose, all right? And next, begin researching specific properties in your chosen location. Momentum builds success. So you want to take action. You definitely want to take action. If you're anywhere in the world and you don't have a real estate agent, just contact me and I'll get you a real estate agent. Okay. All right, guys, that's the end of our class of the Real Estate Bulls Investment Academy. So if you have any questions, here's my phone number 267-930-1249. And again, this is happening every Friday at 11 o'clock. Okay. All right, guys, I will see you on the next show.